So if people look at the bottom time scale and the top time scale, the bottom time scale is just 2 years at a time. And then we've got on the top scale, we've got 4 years per measurement, and the measurements are actually closer. So we had to squeeze time, and then we found that we had to squeeze the amplitude by a factor of 1.6 to be able to fit this in there. And so if this goes up to match you're talking about close to $10,000 an ounce on this, but I think it's going to blow past it.
In a compelling analysis, financial educator Mike Maloney of goldsilver.com draws striking parallels between gold's historical price movements and current market conditions, suggesting we might be on the cusp of unprecedented price levels for the precious metal. Maloney's analysis centers on a comparative study of two crucial periods in gold's price history, the 1970s bull market and today's market dynamics. Using an overlay chart that aligns the market lows of 1971 and 1999, Maloney illustrates remarkable similarities in price patterns despite the different time frames. The 1970s proved to be a transformative decade for gold, triggered by the collapse of the Bretton Woods system in 1971. This pivotal event ended the fixed exchange rate between gold and the US dollar, allowing gold prices to float freely. The result was dramatic. Gold surged from its fixed price to approximately $665 per ounce by January 1980. When adjusted for inflation, this peak represented over $3,300 per ounce in today's terms. However, what makes Maloney's current prediction of $10,000 per ounce particularly intriguing is his concept of stored energy in the market. He suggests that the current market conditions have created a compressed spring effect, potentially leading to what he describes as upcoming fireworks in gold prices. Though unlikely under normal conditions, a dramatic surge in gold prices could be triggered by factors like economic instability, currency devaluation, and geopolitical tensions, like the 1970s. The rise from gold's 1999 low of $253 per ounce to current levels highlights its potential for significant price movements under the right conditions. Before watching this video, please subscribe to our channel, hit the bell icon, and share it with your friends.
That one little spike down that goes down below 14, that is January 1980, when silver, gold had been rising for months and months and months. And it was about November of 1980, 1979, that silver finally really took off like a rocket and soared from about $4 to $50. And so the gold silver ratio spiked. And I think that day is coming again. And that will be an alarm to either start considering selling your precious metals or converting your silver to gold and getting many, many times more gold than you paid for. That's the reason, it's been so out of whack that I haven't bought any gold in a long time because I look at the ratio and I just can't allow myself to buy gold at these prices, this out of whack ratio, because eventually things return to the mean, and all the paper gold and silver that's traded today is building up pressure. The free market has not been able to resolve this issue because the paper is preventing it. We originally did this chart, you and I, back in 2022, and basically I asked you to do what they do, something called Elliott wave, for anybody that doesn't know. When something is rising, it goes up in like 3 or 5 waves. So it'll go up in wave 1, wave 2, wave 3. And I had you take the lowest price that gold traded at between 1980, and I believe we did this in October of 2022. And so it didn't have that extension on it. It had the up wave and then that bowl. It didn't have that area, that tail. And then you updated it for Limitless that I appeared at just, 4 months ago or something like that. The blue scales on the right side and the bottom is the 1970s bull market, and that's the blue line. And then the orange scales, the gold-colored scales, on the top and on the right-hand scale, that is the present day. And what you had to do to get that, it's 1970, August 15th, 71, and 1999 was the lowest price that gold hit between 1980 and today. And so we took those two lows that were there, lined them up, and then you took the highs from 1970 and you squeezed today over. And so if people look at the bottom time scale and the top time scale, the bottom time scale is just 2 years at a time. And then we've got on the top scale, we've got 4 years per measurement, and the measurements are actually closer. So we had to squeeze time. And then we found that we had to squeeze the amplitude by a factor of 1.6 to be able to fit this in there. And so if this goes up to match the, you're talking about close to $10,000 an ounce on this, but I think it's going to blow past it because of all this stored energy. So you're talking about some real fireworks.
Mike Maloney predicts a dramatic surge into triple-digit territory. This bold forecast stems from a compelling combination of supply constraints and escalating industrial demand, particularly in emerging technologies reshaping our energy landscape. The bullish outlook for silver is driven by a surge in industrial demand, which now accounts for more than half of global silver consumption. The solar sector, which saw a 158% increase in silver use from 2019 to 2023, exemplifies this trend, which is fueled by the global shift toward renewable energy. Silver's essential role in photovoltaic cells, power grids, and 5G technologies underscores its growing industrial importance. The Silver Institute's latest projections show intensifying market pressure. They forecast global industrial silver demand to reach a historic peak of 632 million ounces in 2024, marking an 8% increase. Combined with recovering demand from traditional sectors like jewelry and silverware, total silver demand is expected to hit 1.21 billion ounces. However, mine supply growth lags significantly behind, projected to increase by merely 1%, setting the stage for a continuing supply-demand imbalance. Maloney's analysis extends beyond current industrial dynamics to consider silver's historical role as a monetary metal. He suggests that silver could experience a renaissance as a monetary asset alongside gold in a financial crisis. Let's get back to the interview.
That outlier of Russia makes me wonder what happened in their currency supply, because that creates an arbitrage opportunity. Somebody can export one bag of coins of one metal and swap it for a different metal. When you bring it back, you can buy 2 bags now. And so you keep on repeating the process. And what happens when you're out of step with the rest of the world, either your gold or your silver is going to leave. That you will see silver in the triple digits. It really needs to be there to get that supply back up. And then for the past several years, we've had a supply deficit. And we're just, with all of the battery technology and solar that's coming out right now, the industrial demand for silver. And all you need is a crisis and people actually wanting it when there's monetary demand. When gold and silver start acting like money once again, then you're going to see some real fireworks, some fireworks in gold, and sort of a nuclear bomb in silver. I mean, it's going to be huge. Egypt is the only one that goes across the entire graph, spans the entire time period. But I do see that in the ancient world, before gold and silver became money, before they became fungible, when it was little scraps, bits and bobs left over from refining and making artwork or religious objects or something like that. They were trading these, they were being used as a medium of exchange, but they weren't fungible. You had to weigh, and every one of them, if you're buying something with it, you're doing a trade, you had to weigh the precious metals, and then the seller had to take a guess as to the purity. So it was the invention of money that made trade easy once it became fungible. Same purities, same weights. And you can see that for some reason, when it comes to international trade happening and gold and silver being money, so it's being taken on ships, certain weights and purities, and it's getting distributed all through these countries. It goes up and it's all grouped together at that point. Yeah, right, exactly. In my book, I had said that there was a point in ancient China where silver was twice as valuable as gold. And if you look at northern China on here, that cluster right there, there's only one silver mine in there and it's all gold mines. Well, there might be 2 silver mines. But in any that or the cluster that's at the very top going to the right on that map, if there's so much gold being dug up and no silver. Now, one of the things that this map doesn't show, that it says gold deposit, silver deposit, it doesn't tell you the size of the deposit. You might have a whole bunch of tiny gold deposits and one giant silver deposit, and that upsets the ratio. But still, I can see that silver being twice as valuable as gold in some areas on the planet before all the areas were connected together is entirely it's a high probability.
Rising industrial demand for silver, supply shortages, and growing investment interest position the metal for significant price increases. The ongoing physical deficit and a recovering jewelry sector highlight the growing pressures on supply. As silver's role in industry and investment strengthens, its value could grow substantially in the coming years. What do you think? Will silver reach triple digits soon? Let us know in the comments. If you found this insight on silver's future interesting, please like, share, and subscribe for more updates. Thanks for watching.